smiles on Wall Street this morning as Meta shares soared nearly 20%. The parent company of Instagram and Facebook projected first quarter sales that could beat Wall Street estimates, while also scaling back costs by $5 billion.
So Meta reported its quarterly earnings, the last quarterly earnings of its fiscal year, and for the most part, they were very positive, showing turnarounds in user numbers, engagement, top-line revenue, bottom-line revenue. Basically, all of the metrics, the numbers that had been really troubling over the last couple of years have showed very strong signs of turnaround. So, of course, the investment community very positive about that because it shows that the company that everyone thought was crashing and burning over the last year really is showing signs of life, and there is light at the end of the tunnel.
Tech expert Carmi Levy says this is great news for Meta, and investors are optimistic after the company announced a $40 billion share buyback.
Investors love when companies buy back their stocks because it shows that the leadership is very confident in the future of the company, and that so much so that they want to buy back stock that's out there. And what it does is it tends to boost the value of stock that's already out there that isn't being bought back. So everybody benefits. It's almost like a short-term payoff for great performance.
CEO of Meta, Mark Zuckerberg, spent much of last year placing experimental and costly bets on his metaverse project, and as a result, costs spiked and revenue fell for the first time. However, yesterday he said 2023 would be the year of efficiency. Meta has fallen on hard times amid a broad post-pandemic slump in digital ads. Now it is focused on improving its content recommendations, powered by artificial intelligence, and its ad targeting systems to keep users clicking. This as the average age of Facebook and Instagram users is getting older.
There are no rules in this house. I'm not like a regular mom. I'm a cool mom.
What we're seeing are signs that social media on the whole is growing up. It's almost like it's hitting middle age. And so Meta is trying to figure out how to run its properties, not as they're growing double digits year over year, which is no longer the case, but as their user base is kind of flattened out and as the average age of a typical Facebook or Instagram user gets a little bit older.
The digital ad giant faced a brutal 2022 as companies cut back on marketing spending due to economic worries, while rivals like TikTok captured younger users. Meta forecasts revenue between $26 billion and $28.5 billion in 2023, compared with analysts' average estimates of $27.1 billion. Zuckerberg described the focus on efficiency as part of the natural evolution of the company, calling it a phase change for an organization that once lived by the motto, move fast and break things.